Many times we're asked, what is the actual application process for cyber liability insurance? Today we're going to go over a typical application. Now this is a paper version of it, but it gives you an example of what the questions are, what information you will need to come up with in advance of that, and also what are the types of things that a typical cyber liability insurance policy underwriting is going to ask. Now every insurance company is different. This is just an example, so you may find that there may be other information data points needed, but this will give you a good idea of a cyber liability application process for an insurance policy. First of all, it's going to ask you who is the named insured. So what is the name typically of a company? And you want to use the official formal company name, XYZ Corp LLC. Whatever is on your corporate documents, that's the name you want to use. If you have a website, which presumably you would if you're getting cyber insurance, put your website names here. And notice it says website domains with a plural, with an S. If you have more than one website, you want to include all of them because you want to cover all of your digital assets. So if you have XYZ Corp LLC, XYZ Corp Sales LLC.com, XYZ Corp mail.com, right? You want to make sure you have all of your domains listed. Sometimes companies will use multiple domains for customer facing, for internal, for your VPN, for your mail. Make sure you list all your domains because that's what's going to go into the underwriting. Your physical address, city, state, that's pretty standard. The reason why you want to put all your digital assets is because part of underwriting for most insurtech modern insurance companies is going to be pinging and looking at your digital assets to see what your risk profile is. And if you have all your assets there, they can give you an idea of what your risk factors are to mitigate them and also to see how that's going to fit into your policy. Next is what your industry is. Are you in the publishing industry? Are you in manufacturing? Are you in the legal industry? If you have an NIC code, you can put that there, or just the name of the industry. How many employees? That's important. What's your revenue expected over the next 12 months? So you're going to put projected. Gross profit on that revenue. So if you have, let's say, a $2 million revenue and a 20% profit margin, you would put in, $400,000 into the gross profit. Then it's going to ask you a lot of yes and no questions. Within the last 3 years, has a named insured suffered any cyber incidents resulting in a claim in excess of $25,000? Yes or no question. And any of the questions that are answered yes or that are in the dispositive or negative, you're going to have to put an explanation. Explain the cyber incidents and or claims. Is the named insured aware of any circumstances that could give rise to a claim? Yes or no? And that's important. If the reason you're looking for cyber insurance is because you've had a hacking event or you've had a data loss, you want to put that down there so you can make sure that, first of all, you're not going to be excluded from coverage for all events because you didn't put that down, but also you may get some mitigation suggestions to keep any exclusions from merging into other areas of your business. In this example, question 3 is, does the named insured implement encryption on laptops, desktops, and other portable media? Yes or no, or sometimes. You notice this one says sometimes. They're asking you if you use encryption on your devices. That's going to affect your, first of all, eligibility, but also probably your rate. Does a named insured collect, process, store, transmit, or have access to payment card information? Meaning that, do you process credit cards? Right? PCI, payment card information, is credit cards. Personally identify information, meaning that, do you collect driver's licenses? Do you collect other customer data? Or PHI, which is health information, private information about people's medical records. Other than employees. So this is if you're collecting this for customers, vendors, clients, right? Other than employees. Yes or no? If yes, what is the estimated volume of payment cards? So if you take credit cards and you process them and collect that information, what is your volume? No records, less than 100,000, and then up to over 1 million. What about personal information or health information? How many records do you have access to? Same thing, less than 100,000, over 1 million, and anywhere in between. It's important to have those volume numbers there because that's going to change your eligibility, your rate, but also what mitigation or prevention measures the insurance company will likely suggest or even require of you to make sure that you're following their standards. Next question. Does the named insured, that's you, maintain at least weekly backups of all sensitive or otherwise critical data and all business systems, offline or on a separate network? That's a long-winded question. Basically what they're asking you is things that are important to you, data, software, programs, do you have a backup copy of it, either on a separate network internally or off-site or in the cloud or somewhere else? Yes or no, or NA. Does the named insured require a secondary means of communication to validate transfers in excess of $25,000? Meaning that if you're moving money, paying a bill, paying an invoice, uploading payroll, doing a wire transfer, any type of money transfer in excess of $25,000 do require two parallel confirmations of that. So it can't just be your CEO calls up the bank and say, hey, send $25,000 to XYZ Corp. Hey, put $28,000 into payroll. Does it require a secondary validation of that transmission? And that question right there is a clue. That's a hint. That tells you that this is an important factor, whether you get insurance or not, to put into your protocol. Because if you say no to that question, they might come back and say, yep, we will sell you insurance, but you have to start doing that if you want coverage, right? So make sure that you use these questions as a guideline to what your best practices might be. Next question changes gears a little bit. Within the last 3 years, has the named insured, that's you, been subject to any complaints concerning the content of its website, advertising, social media, or other publications? This gets into different types of losses that could have to do with copyright infringement, maybe violations of different laws with content, maybe ADA, maybe, social type complaints. Do you have anything on your website that's problematic that you know that you've been made aware of? Either a regulatory agency, a consumer, somebody has said, hey, this is bad news. We don't want this on your website. Next one is, does a named insured enforce procedures to remove content that may infringe or violate intellectual property or privacy rights? There you go. So do you have a policy that if somebody says there's something that you're putting out there, website, advertising, printed material, whatever it is, do you have a way to respond if somebody says, hey, this is my content that you're copying, you're violating privacy rights? Do you have a policy to review it and take action if necessary? Again, you look at these questions as clues to what you might want to do or what the insurance company wants you to do if you have coverage. So we're jumping to the next page. Notice it says all questions on page 1 must be completed for both standalone cyber insurance and technology E&O coverage. So there's two different types of coverage. And page 1, the first section we did, is required for both of those. Below are required only for technology errors and omissions. So this is when you're expanding your coverages. Please describe the company's use of technology in delivering its product or services. Well, that's kind of an open-ended question, wouldn't you say? So you want to put down there as much information as you can. Within the last 3 years, has the named insured been subject to a dispute or claim arising out of a technology error in excess of $25,000? So did your program make a mistake? Did your computer make a mistake? Did your system cause damage because of an error for more than $25,000? That would be something you would know about. You want to make sure that you make them aware of that. Now, here's a series of questions of industries or activities that are more likely to be problematic. These are higher risk industries. So here's what it asks. Are you operating as a managed service provider, or does the named insured participate directly in or sell technology designed for any of these industries? What are they talking about? Cryptocurrency, cannabis, Internet of Things. Those are network devices, financial services, healthcare, blockchain, automotive, aviation, military and defense, gambling, payment processing, adult entertainment. It says payment processing twice. Point of sale software. That's the software that goes into the little computer credit card readers at a store. And professional services, legal, medical, other licensed professional services. So, why is this list here? And why are there so many different things? They're not all vice type things. There's adult entertainment and cannabis, but there's also legal, medical, right? Why is this here? Well, these industries are a list of areas of profession that have been known to either be higher probability targets for hackers or higher probability activities of losses or damage. The insurers have seen more losses and risk in these areas. So they want to know, are you either directly in or do you sell technology that's designed for those industries? In any one of them, if you're in or around any one of them, you got to click yes. And if you click yes, they're going to ask you more. So, next question. How often are the named insured services provided by written agreement or contract? So when you provide service to your clients, is it just verbal? Is it just, through the internet? Or do you have a written agreement and contract? And it gives you percentages. 100%, 50%, or 0. So take a look and see how many times your clients have to do a contract to do business with you, or can they just call you up, send you an email, and you send them their service, provide the service. Why is that important? Obviously, again, it's a clue to let you know that doing something with a contract is probably better than not having a contract. If you do have a contract, it will help limit the scope of losses if you have it written properly. It will also give you guidelines on what the expectations are for the client. Remember, we're not attorneys, we're not giving you legal advice, but these are the things that go into protecting your company from excess losses. Last, identify the standard risk mitigating clauses or methods contained within the contracts. Basically saying, if you have a contract, what is in them? Customer acceptance and sign off, disclaimer of warranties. These are all kind of boilerplate sections you see in many contracts. Pull up any contract that you have, your cell phone contract. Just go to a random website, look at terms and conditions. Look at the next time you buy something online, when it has you click that box, I agree to terms and conditions. I guarantee you're going to see a lot of these headers as paragraph names for the different sections. Hold harmless agreements. That's a great catch-all, hold harmless or indemnity section. Limitations of liability. Sounds exactly like what it is. It's limiting the liability that you have as a company by providing this service. If somebody gets damaged, hurt, injured, or creates losses for them, it limits how much of that exposure accrues to you as a company. Exclusion of consequential damages. These are all legal terms that an attorney will use to create your contract so that you're not putting yourself and your company's assets at risk just by providing a service. Indemnification clauses, binding mandatory arbitration. That's another one that keeps legal fees from escalating. So if somebody sues you, you have to go to arbitration, which limits the amount of legal fees that have to be paid. And then project phrases and milestones. So if you have a service you're providing, it gives you different benchmarks of how that project is advancing. So you would select which ones of those are in your contract, and that will help the insurer understand how much liability is disclaimed within your agreement with your customer and how much you retain as a company. Again, you don't want to become a lawyer and try to create all this yourself. You want to get good legal advice, but the insurer that's protecting you wants to know how much liability you're taking on as a company. hopefully this gives you some idea of what goes into underwriting an insurance policy for cyber liability, which has been much more popular. The market for it is about $10 billion a year right now. It's going to be $22 to $25 billion in a couple years. More and more companies are doing this type of coverage. So if you are getting ready to apply for cyber liability insurance, consider this as a roadmap of what information you might need to put together. You might also need loss runs, prior claims history. You might need some examples of your contracts depending upon which company is writing your insurance. This is not the only example of an application, but it gives you an idea of what you would need to put together to come up with a good policy for your company. If you have more questions, you can reach us at our website, riskcoverage.com. We'd be glad to be of assistance.